What's going on, guys? Welcome to our Tuesday webinar here, all about whale activity and identifying smart money addresses. As we can see here on our post from yesterday, we're going to be getting into a few subjects here to go over basically how to track whale behavior in order to comprehend what is a good strategy and a way to analyze what the top holders and those with the most at stake for any given asset are doing with their assets at any given time. So this is going to be a 1-hour webinar. I'm here with Dino, and we're going to try to navigate as many metrics as possible to give you guys an understanding of which ones can really be valuable to give you a good advantage in terms of understanding what's happening in the markets, specifically related to top holders. The three main subjects that we're going to be hitting on are the following. The first being analyzing the behavior of large token holders, the second being tracking market moving addresses, and the third being timing volatility markers. Between these three, we've got a lot of metrics that we'll jump into. And of course, whether this is a webinar or This Week in Crypto call, we always want to remind everyone that everything we're about to jump into is not investment advice. This is all data-backed, fundamental, on-chain metrics that are factual and not biased in any way, not us trying to lead you guys in a certain direction. It's simply what is being shown, and we're going to be trying to give as many concrete examples of what these whale metrics are and how to use them effectively. That being said, we're going to jump right into our Sanbase platform. Of course, for those of you unfamiliar, you're going to want to head to Sanbase here, app.santiment.net. I have Ethereum highlighted right now because it's our largest F-based asset where we have the most metrics for any F-based assets. Basically, we have plenty for Bitcoin as well, Litecoin, a handful of top 10 crypto assets, but for the most part, you're going to be seeing the most of these types of metrics on our Ethereum-based assets, and no better place to start than Ethereum itself. Here I have highlighted our supply held by top addresses metric, which is basically showing us the total supply that's being held in terms of the percent of total supply by top Ethereum holders, right? So all you got to do here is add it to the chart here, which I've already done, and you'll see everything pop up. Of course, I won't get into the logistics of how to, organize the chart because that can be saved for another call here. But long story short, what we want to see is typically when a price is rising, you want to see the supply held by top holders continuing to stay high, or at the very least staying flat, right? If you see a really big drop off, that's a sign that those top holders are dumping down to smaller addresses. And we'll get into some more direct examples of when top holders are doing that with some other metrics momentarily.
Yeah, actually, Brian, if you don't mind, let me take over the screen for a sec, because I think while the top addresses are a good sort of interim metric, I think it's maybe better that we start with whale transactions, because
Sure.
using the flow of the different types of metrics and what they seem to suggest, I think whale transactions are kind of probably the most general metric that we can start from, and then we can dive into like specific addresses after a while. So let me share my screen, guys. Let me know in chat if you can see it. We have done this type of webinar about a month ago, but it was a private webinar for our Sanbase Pro subscribers. So we got a pretty good reception for it, and we thought, why not just open it up to everybody that wants to know some of the metrics on our platform that are specifically tied to whale activity, how we usually use them, and different ways that you can utilize them on your day-to-day sort of due diligence and market analysis, right? So what we're going to try to show is three sort of categories of metrics. Like I said, the first one is going to be all about whale transaction count. This is actually our latest metric as far as whale activity is concerned, but we've already done some backtests on it with some pretty promising results for a metric that's pretty much like two months old. So we're going to start with that one, show you exactly what it means and how we use it to analyze large whale moves. Then we're going to move into supply distribution, which is one of the metrics that we very often use on our weekly calls, where we look at the behavior of a specific subset of addresses, like, for example, all addresses that are holding between 100 and 1,000 Bitcoin, or essentially Bitcoin millionaires, and you look at the combined balance of those addresses over time and how they kind of correlate with the price of the coin, and whether there are any specific correlations there that you can kind of take in your day-to-day trading, right? And then finally, we are going to look into top transactions. Now, this is where we go from mega sort of meta in terms of looking at network-wide metrics like whale transactions and supply distribution, to very granular analysis. So we're going to look into specific address activity. We're going to dive deep into address by address transactions, and we're going to show you how to find sort of market moving addresses on a daily basis. And then how to set up alerts for those types of addresses once you find them. Once you find, let's say, a whale that is seemingly very adept at figuring out how the market works and when to dump and when to accumulate, how to set up addresses, how to set up alerts for those addresses so that the next time they start making moves on the market, you can actually basically front run the market with them, right? But like I said, let's start with whale transactions. Let me know, by the way, in chat if you can see my screen well, and if you can hear me well. I assume, Brian, on your end, everything sounds good, right?
All looks good. All sounds good.
All right, cool. All right, so we're going to start, like I said, with whale transactions. So this is the newest metric that we've added as far as our whale address activity is concerned. The metric itself is fairly simple. So what it does is, and you can see here in the informational tooltip, we have two of them. We have whale transaction count of above 100K USD, and then a whale transaction count metric of above 1 million USD. So both of the metrics do the same thing. The only difference is in the lower threshold that we are tracking. So the first metric that we're going to look into is the whale transaction count above 100K USD. Essentially what it does is it is a metric that tracks the number of on-chain transactions on a daily basis that are transferring more than $100,000 worth of a particular coin, right? So what I'm going to, when I select it here, what I'm going to see is I'm going to see the amount of transactions happening on the chain for, in this case, Matic, that are worth more than $100,000. So for example, here on March 12th, I can see that there were around 250 different transactions of more than $100,000 worth of Matic coins on the Ethereum network, right? So on the other hand, we have very early on realized that a 100K threshold is very sort of substandard for a lot of large caps. So, for Bitcoin and Ethereum, tracking all of the transactions that are worth more than $100,000 isn't really tracking whales, right? Sometimes. So that's why we've sort of added or upped our game and added another tier for our whale transaction count metric with this one, where you track the amount of transfers of worth more than $1 million in a particular coin on a daily basis. So you can already kind of see a few patterns, and obviously I've prepared a few examples for you guys for this webinar. It's, first of all, like Brian said, none of this is financial advice. And second of all, no metric is a silver bullet, right? Some of these examples that we're going to look into here, they look very simple and they seem to be very clear. It's not always going to be that way, especially on a day-to-day basis. It's going to differ from coin to coin. But I believe that the overall sort of narrative or the overall behavior is what you should take away from the webinar. So, very early on when we've developed this metric, one of the things that we've realized is that, as the price begins to rally, like it did here and here, we seem to have very early on realized that a lot of these spikes in whale transactions count coincide with local price stops for the coin. This, from a behavioral standpoint, seems to make a lot of sense because it would seem to indicate that a big count of large addresses are starting to move their coins on the blockchain to take advantage of the rally, to claim some profits and reduce their exposure and mitigate some of their risk, right? So a few weeks ago, maybe about a month now, we have done a first backtest on this metric. So whenever we publish a metric on our website, we try to do backtests and try to create real-time models and strategies around this metric. Some work better than others. This is the latest backtest that we've done for a metric. I can share in the chat the link to this, or actually, Max, if you're here, if you can share the link to this article in chat so people can read it for themselves, that would be great. So it's one of our Santiment weekly pro reports that we publish every Friday. In it, we've tried to backtest this idea. So we had a premise, the premise being that major upticks in or major spikes in whale transfers seem to have a negative impact on the coin's short-term price action. The reason for that being is that it probably indicates a large number of big sort of whale addresses starting to offload their bags into the rally, take advantage of the pump, right? So in order to backtest this, we've done two different event studies. The first event study was fairly simple. So to test this idea, we decided to look at all of the coins in our database that have a market cap of above $1 million. So that's about, I think, around 1,000 or 1,200 different coins that fit this criteria, right? So we've looked at a sample size of about 1,200 different coins, and we defined a set of rules of what constitutes a spike in a whale transfer count, right? So how do we sort of define for a backtest where we draw the line between, okay, this is a major or a significant spike in whale transfers and something that's sort of along the norm, right? So what we've done is we've defined the event for which our study is going to, for which our backtest is going to, be revolving around. The event is whenever the current value of the metric, in this case whale transaction count, rises more than 2 standard deviations above its mean value for the previous 2 weeks, and I'll explain what that means in a minute, and anytime that its current value ranks above the 0.75 percentile of all previous observations. Now, this might sound like a mouthful, but essentially what this means is that we're looking for this backtest, we were looking at all of the events where for a specific coin, the value or the number of whale transactions on a daily basis rise more than 2 standard deviations above what is average over the past 2 weeks. So basically rises massively compared to its previous 2-week average. And that new value is in the top 25% of all previous whale transaction count spikes, right? So essentially what we're trying to do here is we're trying to figure out what happens with the price of the coin before and after there is a massive uptick in daily whale transfers, right? In daily transfers worth more than $100,000 for a specific coin. So like I said, we've first looked at all of the coins in our database that have a market cap of above $1 million. And then we've done the same study, but looked at all of the coins that have a market cap of above $1 million, but also have an average activity on the network in terms of its daily active addresses of above 100 in the past month. So we've basically added this added criteria in order to, just filter out some of the shit coins, basically coins that have no network activity whatsoever, nothing really being done in terms of value transfer on those networks. So therefore, we've tried to also look at what happens with our results when we try to stricten or tighten our criteria a little bit, whether there will be any sort of changes in the end results. So the first study that we looked at was all of the coins in our database with a market cap of above 1 million USD. And I'm actually going to switch to light mode so that you can see the results a bit clearer. There we go. So, okay, zooming in. So this is the average this is the average price performance of all of the coins that we've looked into. This is almost 5,000 different events that we've studied. So the average price performance in the 2 weeks or 14 days before the event triggers, in this case, like I said, the event is anytime there is a massive spike in the amount of whale transfers on a daily basis. And then the average price performance of those coins in the 2 weeks after there's a massive spike in whale transfers, right? So what we can kind of see here is that on average, there seems to be a sort of steady uptick in the average price of these coins in the 2 weeks leading up to that event, which is a massive spike in whale transfers, which totally makes sense, right? Because according to at least our premise, The reason why we're seeing this massive uptick in whale transfers is because large addresses are starting to take advantage of the rally and starting to take profits, claim profits, offload some of their holdings. So in the 2 weeks beforehand, on average, the price of these coins tends to grow by around 5%. Now, keep in mind that that is a large number of different events that we're tracking. So that's going to be plus 10 to 15% for some coins and less for others. However, over the next 2 weeks, after we see a spike in whale transfers, you can definitely see that there is a massive sort of curve in the average price performance of the coins that we've analyzed, seeming to suggest that on average, the spikes in whale transfers seem to have an adverse impact on the sustainability of a particular price rally, right? It seems to curb a major or a sustainable uptick after it happens. So this was the first test that we've done, where we looked at all of the coins with a market cap of about 1 million USD. And then this is the second back test that we've done, where we looked at all of the coins with a market cap of about $1 million, but also that have at least 100 daily active addresses in a month prior to the event, prior to that massive spike in whale transfers. There seems to have been not really a major difference between these two backtests. Essentially, even when we tightened the criteria to eliminate some of the shitcoins, we've essentially seen very much the same results. Basically, in 24 hours after the spike in whale transfers, we start to see sort of a plateauing of the average price of these coins. Once again, even though the results are very early and the backtest has only been performed once, and we're looking at developing different backtests for this metric, it seems to suggest that the spike in whale transfers has, on average, a negative performance or a negative impact on the average price performance of the coins that we've analyzed. So I'm going to look back into a few examples now, starting with Matic. Like I said, I think Matic is a pretty good example, simply because it had these like two obviously massive clusters of whale transaction spikes, which seem to suggest exactly what the backtest has pointed us to. Basically, once we see a massive spike in whale transfers, we are seeing a sort of thawing of the price action of the coin in the short term. So basically a short-term correction or a consolidation, right? Now, keep in mind that obviously this metric has a few drawbacks. So the number one drawback of this metric is that it looks at the dollar values of on-chain transfers. Now, what that means is that as the price rises, there's going to be more sort of like, for example, if I sent, let's say I sent 50,000 Matic here, right? Or actually, let's assume that Matic is $1 at the moment, right? So I sent 100,000 Matic here. That's going to be 100,000, or actually I sent 50,000 Matic here. That's going to be $50,000 worth of Matic being sent on a blockchain, right? So that wouldn't sort of trigger on our whale transaction count metric. However, let's say that the price of Matic now triples. So it goes from $1 to $3. So this time, when I send 50,000 Matic on the network, on the Ethereum network, the dollar value of that transaction is 150,000. So it would sort of trigger, it would count as one of these whale transactions on a daily basis, which definitely means that, you know, the same sort of transfer of, coin values can differ as the coin's price appreciates in value, and therefore it should be taken with a grain of salt. However, even with that sort of caveat, you can definitely see that, compared to sort of this interim top, there's definitely been a large or a massive sort of outlier in the amount of whale transactions. So even though, obviously there's going to be more whale transfers as the price appreciates, it definitely seems to happen, or the spikes in whale transactions definitely seem to happen at sort of watershed moments in the coin's price action. So this is the sort of first example. And you can also see, even though, Matic is a sort of mid-cap coin, even when it comes to 1 million and above whale transfers, you can see a similar trend. There's less of them, so 25 here, and then around 65. I think this is probably an all-time for Matic whale transactions. Let's see. Yeah, for sure. I mean, there were 60. Well, this is because it's aggregating more data. So when we zoom in, 59, at this point in time whale transactions of more than at least $1 million or more of Matic tokens, right before they sort of first moved down for Matic, right? So even in some cases for these low cap coins, even these massive transactions like $1 million and above can also indicate a increased risk of a short-term correction. Now we can see a few more examples that are prepared. Another one, which is sort of less obvious or less evident compared to Matic, is Uni. So if we look at Uni, we'll look at the last 3 months. So once again, you can see, and this is what I mean by sometimes it's not going to be, you know, the patterns aren't going to be always super clear, right? For example, when it comes to Uni, you can see these cluster of spikes in whale transfers right as the coin started to sort of consolidate on February 21st. We can see another sort of major uptick in whale transfers right around this interim local top. However, sometimes, you know, we also see it during the sort of periods where there's not really a whole lot happening with its price action. And the reason for that is, especially when it comes to coins like Uni, I think the more the coin has utility in terms of the different things that you can do with it, which I think for Uni, you know, borrowing, liquidation, sort of liquidity pools, there's more reasons for whales to transfer the coins, and therefore it's going to sort of make data a bit more noisy compared to like mid-cap coins that are purely speculative in nature. So for example, if you look at Mana, and we look at whale transfer counts. Now here we can see sort of a bit more sort of clear pattern. So once again, massive cluster of spikes around the first first local top for Mana here. Another sort of cluster of spikes as Mana begins to correct. We see another massive spike around this sort of local top and a period of consolidation, and then another sort of spike here before Mana starts to dip again. So in general, while not all the time, or while this isn't going to sort of be a magic bullet or a silver bullet by any stretch of imagination, we do seem to see these patterns repeat itself every once in a while. This is Maker once again as another example, which I think is pretty interesting. We do seem to see these spikes in whale transfer counts coincide with at least local or short-term tops for the coin in question. So you can see Maker spikes here at the first top, here at the second top, and then once again here, right before this recent or latest correction we have seen. So for example, you know, the price of Maker doesn't really, there's not a big difference between the price of Maker here, right, and here. However, it wasn't until we saw this massive spike in whale transfers that the price of Maker really started to sort of taper off. And that's why, I mean, even though the whale transaction count as a metric can be skewed because, you know, it sort of depends on the price performance of the coin, it still seems to suggest that, you know, once we see spikes in whale transfers, on average, the price of action of the coin tends to disintegrate or dissipate, right? So this is sort of the first or the latest metric, the first metric that I wanted to cover, but also the latest metric that we've integrated into our platform. You can find it, by the way, like Brian said, this metric is available for all Ethereum-based coins. It is also available for Bitcoin and Ethereum itself. Where you're going to find it is, let me show you. You go to on-chain data, you scroll down to whales, and then you look at whale transaction count and whale transaction count 100K and 1 million USD. So usually, like I said, for these mid to low cap coins, I think 100,000 USD is probably a pretty good threshold for catching these massive whale transfers, because, you know, for a coin with low liquidity and low market cap, you know, a couple of dozens of transfers of more than $100,000 is usually enough to tank the price in the process, especially if it indicates, you know, sell side increasing or added sell side pressure. Whereas for large caps like Uniswap, I think, you know, looking at whale transaction count where the threshold is higher, like $1 million and above, is probably more reliable. So Brian, anything to add here before we go into the second sort of portion of our whale metrics?
No, I think you've covered whale transaction count pretty substantially. I think it's an incredibly useful metric that is great at identifying exactly when corrections hit in particular. Obviously, on occasion, it can actually call bottoms, but more often than not, it appears to be one sort of like token age consumed almost, where anytime you see a huge spike, there tends to be a correction that follows, especially with these mid caps like Maker that you've pointed out align perfectly with a few of the last tops.
Yeah, right here. So I already see a few suggestions to show you guys how to set up alerts. We're going to be doing alert definitely for all of these metrics. We're going to show you how to set up alerts after the fact. But first of all, I wanted to kind of focus on the behavioral aspect of these metrics, or what they seem to suggest from a behavioral standpoint and the whale activity standpoint. So the second category of metrics that we're going to be looking into is something that we talk quite a lot about. If you ever watched our This Week in Crypto streams, every Friday at 4 p.m. Central Eastern Time, this is something that we go back to quite a lot. Oh, actually, it's called supply distribution. There we go. So we have three metrics under this category of supply distribution, and all of them do exactly as they told. They basically provide a breakdown of a distribution of the coin's total supply. So I'm going to be focusing on these two groups of metrics in particular: supply distribution by balance of addresses and supply distribution by a number of addresses. And we're going to look at, there we go, deselect all of these categories and only select one of them and add the price of the coin in question. All right, cool. So in general, what is the difference between the supply distribution by balance of addresses, which is this metric, and the supply distribution by number of addresses? Let's take a look at, again, Uni, maybe. And let's take a look at sort of whale categories, potential whale categories, right? So the difference between these two groups of metrics is that the supply distribution by number of addresses shows the total amount of addresses or number of addresses that are at any given point holding a certain amount of coins. What does that mean? So for example, here we see 455 addresses that are holding between 10,000 and 100,000 uni coins, right? On the other hand, the supply distribution by balance of addresses shows the total amount of uni that is being held by these addresses. And currently we're looking at the percentage of total supply held by addresses holding between 10,000 and 100,000 uni. And we can kind of see that at this point in time, where there was about 455 addresses holding this amount of uni coins, they held around 1.3% of uni's total supply. If you don't like percentages, you can also look at absolute numbers. So we go back to 10,000 to 100,000 group, and we can see that at this point in time they held about 13.2 million Uniswap tokens, right? And you can definitely see that, you know, this group in particular seems to suggest some, seems to show interesting patterns as far as its correlation with the price action of the Uniswap token. So, for example, we can see this massive sort of offloading event around the February 21st stop. We can see sort of another period of offloading as Uniswap started to rally. I think this was its all-time high at the moment, at that point in time. On March 7th, we see sort of offloading into the dump, and then we see another sort of offloading event here, as well as here more recently, right? However, now we are seeing sort of a, after a while, actually, we're seeing a period of accumulation for Uniswap token, which is probably, one of the reasons why is obviously because V3 is supposed to launch, I believe, today. And in general, I have seen a lot of people suggest that, they're going to be using Uniswap as a platform and Uni token in particular, because they're, hopeful of another airdrop like there was back in, what was it, August last year when Uni dropped, when the Uni airdrop happened the first time around. But in general, sort of, you can see that tracking these sort of large cohorts of holders or cohorts of large amount of a particular coin, in this case between 10,000 and 100,000 Uniswap coins, you can already start to see general patterns. And overall, I think even when if you don't use it on a sort of daily basis, you can at the very least look at the trend lines and figure out whether, for example, at the moment, the trend line is accumulation or capitulation, right? And in general, sort of my rule of thumb is to look at the sort of, so for example, why did I choose this group of holders and not this one, which is, higher? The reason being is that when you look at the number of addresses that exist in these two groups of metrics, respectively, right? So the number of addresses holding between 10,000 and 100,000 uni, there's currently 400 of them, 413. The number of addresses holding between 100,000 and 1 million uni, there's only 169 of them. So what it means is that there's a high likelihood that these addresses belong to exchanges, belong to team, and infrastructure wallets. In other words, it's less likely that this group of addresses is predominantly populated by actual whales, by actual, individual addresses or individual entities that have nothing to do with, exchanges or team or infrastructure wallets, but rather they are probably sort of they're probably populated by non-whale addresses, even though they obviously are whales technically speaking, right? So that's why I like to look at the category, not the category that is the highest. There's probably a few addresses, also holding above 1 million uni. There's above 79 of them. That's why I usually like to look at, somewhere between, addresses, a category that has upwards of 300 to 400 addresses and above, because that's usually the category which is populated by actual whales rather than exchange wallets, team infrastructure wallets, vesting contracts or whatnot, right? And that's why sort of for example, I selected for Uniswap this group of holders. For other coins, it's going to be other sort of based on their current price, it's going to be a different category of holders. If you look at Bitcoin, for Bitcoin, we tend to like to look at, and this is something specific for Bitcoin, obviously, but we tend to look at these two groups of holders combined. And I'll show you why. So these, and by the way, I also forgot to say the fact that you can merge these different groups of holders. So for example, if you want to look into a couple of them combined, you can do so just by clicking on the merge button and selecting which groups of holders you want to merge. So for Bitcoin in particular, we have found that over time, these two groups combined are usually a pretty good indicator of what the sort of relative whale sentiment is for BTC, for large BTC addresses. So addresses holding between 100 to 1,000 and 1,000 to 10,000 Bitcoin have had an interesting relationship between each other for a while now. So if you look at, I'm going to unmerge them for a moment. If you look at only this group of addresses, and then you look at only this group of addresses, you can definitely see sort of a mirror pattern between the two of them. And that's why we started, instead of only looking at one of them, we've started merging them over the past couple of months, because it seems to suggest, from Bitcoin's general sort of on-chain activity, it seems to suggest that, for example, this group of addresses, if you were looking at it in a vacuum, addresses holding between 1,000 and 10,000 Bitcoin, you would say, oh, okay, they've sort of left the market, or they started offloading massively since early February, right? But that I don't think would be an accurate assessment of what's going on Bitcoin's network at the moment. Instead, what we're seeing reallocation between these two groups of holders. So rather than 100,000 to 10,000 to 100 to 1,000 Bitcoin group sort of growing, and 1,000 to 10,000 Bitcoin group shrinking, what we're seeing is more likely institutional wallets and institutional addresses holding massive amounts of coins, like between 1K and 10K BTC, probably reallocating, and I've seen some articles to suggest this as well, probably reallocating or redistributing their holdings into more, into the different wallets, larger group of custodian wallets. And that's why you see sort of the smear pattern between these two groups of holders. So it's not that one is dumping and the other is buying. It's more likely that they're just sort of in cahoots and probably belong to pretty much the same holders, right? So that's why I like to look at them merged together. Because here you see some very interesting patterns for BTC, right? On average or overall, we definitely seem to, we see that the trend is accumulation, and it has been since early October. Like if we go back, let's go back. So I think, here you can say that it really started after a period of sort of panic after this looks small now, but this was a massive sort of dump on September 1st. Just in the aftermath, there was a little bit of panic by large Bitcoin addresses. And then since then, we've basically seen a massive sort of accumulation spree until this previous or last sort of month and a half of price action. Now, if I zoom in a bit, what you're going to see is you're going to see several sort of interesting potential offloading events of these two groups of holders. Here, let me zoom in so you can see it exactly when it happened. You can see massive drop, basically around, so we went from 9.13 million Bitcoin held by these groups of these addresses to 9.09 million. So that's 40,000 Bitcoin being offloaded or sort of moving away from these addresses within 24 hours, right as Bitcoin's price started to hit all-time high, and we came across a correction. And then once again in April, after buying the dip, we've seen another sort of massive offloading event of these two groups of holders combined from 9.16 to 9.11, so another 50,000 Bitcoin. So this is 2 billions of dollars, $2.8 billion being, essentially moved away from these addresses in this case, 72 hours. So even if not all of this is going to sort of account for additional sell side pressure, a move is definitely a move. And it certainly seems to suggest, especially given the point in time in Bitcoin's price action that it happened, it certainly seems to suggest a lack of confidence among some BTC whales, and probably short or interim profit taking. And then you can go back and look at additional Bitcoin metrics like exchange inflow, age consumed, network profit loss, other metrics that can give you more insights into whether these drop-offs are connected to exchange related activity. So that you can find out whether these whales or these sort of offloading events are connected to whales moving their money to exchanges. And we're going to look into specific ways how you can do that in a minute. But overall, we've seen another sort of massive period of another massive offloading event. And then over the last basically 2 weeks, there has been another sort of thawing or decline in Bitcoin's large holdings. Once again, sort of coinciding with a pretty lethargic price action from BTC. So while it's definitely not an end-all be-all, I do personally like to look at these two groups of holders. And when I write my reports, weekly reports or daily, I definitely at the end of it always go back to what are these two groups of addresses doing, because they definitely so far seems to have established a very interesting dynamic or relationship between their holdings and the price. So if they are, if we see a massive decline in their, combined balance in the short term, it might suggest that Bitcoin's price action is going to find, is going to be, it's going to be challenging for Bitcoin's price action to have a sustainable uptick. And then if we see sort of periods of accumulation like we've seen it here, it's going to be more, there's going to be less obstacles on Bitcoin's way to price recovery and potentially another all-time high, right? So for Bitcoin in particular, just because we've been looking at it a lot, this is what I would suggest, looking at these two groups of holders combined, right? Anything to add, Brian, before I look into a few other examples?
No, feel free to continue, and I'll jump in with a few others toward the end of the call.
Okay, cool. So let's look at Matic. And for Matic, I want to let's look at the last 3 months. Actually, it seems like this is also a good category to look in, but I think I wanted to check out 100,000 to 1 million Matic holders. Yeah. So this group of Matic holders seems to have another interesting sort of relationship with the price of Matic. So we're looking at the balance of addresses, the total balance of addresses holding between 100,000 and 1 million Matic coins, right? And this is the last 3 months of Matic's price activity. So what we can kind of see is that there have been several sort of accumulation patterns or accumulation cycles for this group of holders. The first one happening here before we hit a wall or a sort of a local top for Matic on February 10th. And then we see a period of just a decline in their combined holdings over a stretch of about 5 to 6 days as the price of Matic also begins to consolidate. Once again, we had a massive accumulation spree which ended, and maybe we can zoom in to see exactly where it ended. It ended actually right before the all-time high. So this is quite on point, suggesting that whales were at this point in time, large addresses were moving their holdings urgently. So we went from 269 million Matic being held by these addresses to 246. Yeah, so a pretty sizable sort of 25 plus million drop in about 12 hours. So when you see sort of this type of drop off, especially as Matic is doing what it's doing with its price action, it's not necessarily a great sign for its short-term activity. Price activity. And then more recently, as Matic began to reach another all-time high, we have seen a period of offloading or a period or another decline cycle by these large addresses, suggesting another sort of profit-taking event and in general short-term risk-off behavior, which seems to also coincide with Matic's general price activity as well. Now, obviously, the reason why I mentioned Bitcoins, those two Bitcoins entities or addresses, groups of addresses in particular, is because if they dump and if Bitcoin corrects, usually it doesn't really matter what other groups of holders, especially when it comes to low and mid cap coins, are doing. Bitcoin's correction is going to draw everything with it, right? So that's why. Although sometimes it's very important to look at specific coins holders, it's always also important to look at Bitcoin in conjunction with whatever specific coins whales you're examining at the moment. And then maybe one other example. Let's look at OMG. Let's look at last 3 months. Yeah. So I mean, the reason why I sort of used OMG here is because obviously a period of major decline in the large addresses, in the holdings of large addresses here for OMG as it started to hit an all-time high on April 10th. And then we saw another sort of massive decline in the whale addresses or the holdings of whale addresses right around the February 14th top as well. We have also seen a period of accumulation as the price of OMG started to sort of recover. So, once we sort of identify these types of patterns, it definitely seems to be a group of addresses that we could benefit from if we keep a close eye on them. So these are sort of the types of patterns that you want to establish and the types of addresses or entities that you want to keep a close eye on. So if we look at the total amount of holders, we got 526 in this category and then 102 in this one. Oh, by the way, one other metric that I wanted to show you guys. So this is something that we've added recently, maybe 30 days ago? Yeah, something around that. So it's still in beta. We haven't really done much backtests on it, and we're continuing to improve our labels. But like I said, one of the problems with this type of metric is that you're never entirely sure whether a group of holders are, legitimate whales or whether these addresses belong to exchanges, infrastructure wallets, miners, whatever, right? So we're trying to sort of solve that problem by adding labels for specific addresses. Like, for example, if we look at, I don't know, this group of holders, holding between 10,000 and 100,000 Matic, you can also select, in this particular metric, you can select different categories of holders that we have labeled as such, right? All of the addresses that we have labeled as exchanges, infrastructure, wallets, miners, and whales. And you can only look at only their behavior over time. So for example, if we look at whales, yeah, we can see that even though the 10,000 to 100,000 group has been growing overall, reset to all, especially more recently, the whale group, or the amount of addresses that belong to whales, according to our data, has not grown in comparison. So it seems to be, the growth of this category of holders seems to be accounted for by other addresses, likely exchanges or infrastructure wallets, rather than legitimate whales. Like, for example, if we look at exchange addresses, there we go. So we see that the addresses that are growing are addresses belonging to exchanges rather than addresses belonging to whales. So if you want to do sort of a more granular analysis of a particular group of holders and who they actually are, this is a sort of, like I said, the metric is still in beta, and there definitely we're not. Our labels are still being improved on a daily basis, but I think it's a very good sort of experimental metric to combine with your analysis of supply distribution overall. Now, before we move into the last group of metrics, we do have a few templates that we've developed by using supply distribution. So if you guys don't know, outside of Sanbase as a platform, we have developed a special plugin that you can use on your Google spreadsheets to directly import sentiment data into Google spreadsheets, right? And the reason why you would do it is because if you want to run any sort of backtest, develop your own real-time models, your own portfolio tracker, you can use Santiment's data to, outside of Sanbase as a platform for your own purposes. So Brian, I think you made a few templates using supply distribution in general to kind of give more context as to how this metric can be used. If you want to share your screen and share that with the people as well.
Yeah, let's do it. I'll give you guys a quick tour on how it works here. Give me just a moment.
Let me know when I can stop sharing.
Should be up now. Can you see everything okay?
Yes. All right. I'm going to stop sharing now. Go ahead.
Cool. So what we're looking at right now is a series of about 40 coins and their percent changes in the number of whale addresses. The yellow, what I'm actually going to do here, it's going to refresh anyway. So while it's refreshing, I'm just going to remove the price changes for the purpose of making it just a little easier to see as I present it, because the price changes aren't as important. Let's go back here. It's refreshing now. It looks like it's just finishing up. You can see the bars and the rest of the lines adjusting. So as you see these compile, what each bar is showing is essentially what the percent changes over the last 1 day, shown here in yellow, the last 7 days, shown here in blue, and the last 90 days, shown here in purple. You combine those all together, and what you can actually do is go to the data tab, and let's say you want to just sort it by the last 7 days from the most percent change to the least. We'll ignore Sand token, which actually has been seeing a huge surge, but I want to get into kind of the main top 100 F-based assets that we normally look at on these calls. The first one that's being shown here is Aave, which is indicating that over the last 7 days, there was a 5.5% change in the amount of overall whale holders deemed by the holders that hold over 100,000. Basically, whatever the 10-factor number of exponent is between 100,000 and 1 million. So if we look over to Aave really quick, which I'll do here, I'm just going to switch from Litecoin, which I was going to show, over to Aave. So Aave's price is currently at about 455 or so, meaning it's actually spot on. We're showing the 1,000 to infinite amount of coins in those specific addresses as whales, and that means that they're basically holding 100,000, or in this case, about $454,000 or more. That's what this line is, and showing how many addresses hold 454k or 454k or more. And very clearly here, we notice an obvious pattern. Back in November, 6 months ago, we were sitting at 210 of those addresses. We got up to a peak of 394, so massive, massive jump there, almost a double. And then it actually dropped off for a while, and you can see right when it peaked, the price basically hit kind of that area where it was in flux, and then it dropped off significantly with the rest of the market-wide correction that happened. When that happened, you'll notice the whales started to accumulate. And just recently, since about April 30th, we went from 334 of those addresses to 353. So an increase of 19 when you're only talking about 353 of total addresses is actually pretty significant. And that's sort of what the snapshot view here is supposed to help with. It makes it very easy to simply look at the percent changes for a week, or if you want to look more long-term for 90 days or really short-term over the last 1 day, you can find which asset is really getting the highest increase or biggest decrease in those whale addresses. And there's a very obvious correlation, especially with the larger addresses, when it comes to the amount of whale addresses and how much that price tends to rise or fall over time as those numbers fluctuate. So, long story short, we see, projects like Aave seeing a little bit of a surge over the past week, but take that with a grain of salt, because over the last 90 days, it's actually down 2.6%. And we can see others that over the last 90 days, they had a huge, huge surge. Storage here at 32.4%, for example. And then Matic here is actually off the chart. I think it was in like the 70 to 90% uptick range. Let's look at Matic really quick, and we can see. So this is why it's the last 90 days, guys, and kind of looking about even, because February here, if we look at February 4th, to be exact, we were at about 343, and now we're at like 353. So it's kind of flat, but take a look at Matic here. And we may have to adjust the numbers really quick since Matic is a much smaller priced asset. So I'm going to take it to 100. We'll just estimate and call it 100,000 or more. So that means that it's just a little under. It's about $70,000 or more. You know what? I'm actually gonna. I think I had it programmed to 1 million coins or more. Yeah, that makes more sense. So yeah, we're looking at basically $700,000 or more for Matic. And going back here to November 4th, we had 102 of those addresses. 6 months later, we actually got up to 204. So we're actually 203 now, more or less exactly doubled in the last 6 months, the number of million token or more addresses that exist on the Matic network. That's significant, and it's not a surprise. You can see that the price really did follow these number of addresses over time. And when you see something like this, like a big drop off, despite the whale addresses staying high, that's really a bullish divergence, at least according to this metric. Of course, it's best if you combine it with many other on-chain and socials to get the best gauge as to where prices are going. But from this metric alone, which we deem to be a pretty significant alpha metric, we see some nice price leading indication here to show that when the price was staying flat here through late March to late April, and the amount of addresses were surging, it was only a matter of time to see at least some sort of big uptick in price like we saw on the 25th, 26th, 27th, before getting an all-time high on the 28th. And addresses are still staying high here. So this chart here, which is available to all Sanbase Pro members, this is basically a fantastic way to stay in tune with which assets are getting those big growth numbers or big, subtraction numbers, and finding which assets are just going to are having the highest increase in the stakeholders that really have a lot at stake at any given moment. So if you have Sanbase Pro, definitely check this out. I think that 1 day, 7 day, and 90 day are all good intervals to track in their own respect to give kind of a short-term trader strategy, mid-term trader strategy, or long-term trader strategy. And so keep that in mind. And if you have more questions on how it works, feel free to jump into our Discord and I'll be happy to answer more.
Awesome. Thanks a lot, Brian. Guys, like I said, Sandsheets comes along with Sanbase Pro as a subscription. So, if you're interested in this type of data, not just using pre-packaged metrics that we have on Sanbase, but also building your own sheets, building your own templates, or using one of the templates that either us or the community members have developed, Sandsheets is a great way to do it. All right, last group of metrics, and then I'm going to show you how to create alerts for all of them. What we've shown you so far is very general. So we've looked at whale transaction counts and supply distribution, but all of those metrics and a few different models for supply distribution, but all of those metrics look at a network-wide activity, right? On the other hand, what we wanted to create, what we wanted to introduce as a possibility on Sanbase is also diving deep into specific addresses and zeroing in really on potential market moving addresses. So outside, other than just looking at, okay, there's 250 different whale transactions on a daily basis, which of those whales has sold at the top, and which of those whales and whale addresses seems to have so far proven to have the biggest impact, or at least seems to have the biggest or the best understanding of where the market is going to turn. So in order to analyze specific addresses, to find market moving addresses and find large whales that you might want to track in the future, what you want to do is you want to type top transactions here in the search bar for any specific Ethereum based coin. And what's going to show, what you're going to open, is a table of the top transactions for a particular coin for a particular time. So for example, if I want to look at, and I'm looking at sushi because I have an example prepared, but let's say I want to look at sushi here for March 13th. Let's say this this top between March 12th and March 14th. I can just say, okay, show me all of the top transactions that have occurred on this date, right? So this way, and you can filter them out by value. In this way, you are going to, and actually we're going to look at this particular point in time. In fact, from 14th to 16th is probably better because 14th is when the pump started. So here we look at all of the transactions, the biggest transactions that have happened in this 2-day range. And you will notice that some of these addresses also have a label to them. So we can figure out exactly what the address or who the address belongs to. Not exactly, but who the sort of entity is, whether it's a trader, whether it's a deposit address, whether the address belongs to an exchange or belongs to a team wallet, so on and so forth, right? Because it's obviously very different if you're looking, whether you're looking at a an exchange-based address or a whale address. Because if you're looking at an individual whale address and you're seeing a massive accumulation on that address, it seems to suggest that somebody's buying the heck out of that coin and that a couple of whales are probably very bullish on the coin in the short term. However, if you see a massive spike in the address belonging to exchanges, it's basically a narrative turned 180 degrees around. It suggests that a lot of new sell-side pressure is being exerted on the coin. There is a few sort of addresses probably moving massive amounts of tokens to an exchange, presumably to sell. And that's why it's very important to know exactly who the address belongs to. So I've been this is definitely more tedious than looking at different than looking at sort of network-wide effects. But I think it's a very sort of underrated way to discover addresses that you might want to keep an eye on. And actually, I wanted to look at this top rather than this one. Yeah, I wanted to look at April because it's closer. It's the latest top for sushi, and I found a few cool addresses here that we can take a look into. So in particular, while I was looking at sushi, I found, I'll tell you which address, this address, 0x64. Yeah, there we go. So this address, this is an address that is labeled as a sex index trader. So basically, a person, an address that trades on centralized and decentralized exchanges. And this address, the address that it's sending to, is a DEX. It's a decentralized exchange. So we look at this particular address. We can plot the price of sushi over the holdings of this address. And this is what we get. And you can look at the last year of data just to, yeah, there we go. So this is, these are the historical balance of this address that we have, looked into. Basically, this individual trader that has sent a lot of money to a decentralized exchange at this point in time. So what we can see is that he sort of gotten into sushi very early on, but he didn't seem to like hold it for for long. He probably decided to take profits very early on, and then since then, the next time that he went into sushi hard, from 17 sushi, he expanded his portfolio to 28,000 sushi on January 28th. And this was actually a local bottom for sushi where he went in and bought the dip essentially. So this particular user or particular address has been holding sushi for about 3 months. And then he essentially offloaded his entire address at this point in time, right before sushi experienced a fairly significant correction, right? So obviously, I mean, you can find these addresses by looking at, whale transactions or exchange inflow, but you can't find them. You can't find specific addresses. You can find trends, but if you want to look at or identify exactly who are the most likely culprits for a particular drop in a coin's price, this is much more likely to help you, right? So this is one example that I have. Another example that I have is for CHCB, Swissborg. So I'm also going to look at the latest all-time high. There we go, March. So we look at all of the transactions that happened between March 8th and March 10th. We filter out by the biggest transactions. And the second biggest transaction is a transaction of 1.5 million CHCB from an address that we have labeled as a whale or a trader address to a deposit address, basically an address belonging to a centralized exchange. So let's look at what this address has been doing with its life before and after this massive transfer. So we'll look at the last year of data. Okay, let's look at more data. There we go. Okay, I'm actually gonna zoom into maybe, start of 2017. Just so we can see the patterns a bit more clearly. There we go. So this is an address that is a very long-term holder. They went into Swissborg or CHCB. The first sort of buying spree of 10 million Swissborg was on July 19th, 2018, right? So before the market-wide crash. And so they went ahead with another sort of accumulation spree here, still in November of 2018. They didn't sell at during the market crash. They actually held throughout the 2019, and then the first period of offloading, or sell-offs, or essentially, profit taking from this address, presumably, was here on June 11th, 2020. So the total holdings of this address went from 46.2 million to 40.2 million in, what is this? Actually, in a 7-day span, it went from 46.2 to 43.2. So this is 3 million CHCB, right around CHCB's local price top. And we can zoom in to see exactly sort of when it happened. And then the next time it happened was right around this local top for CHCB. And then finally, we saw a massive drop-off in its balance as the price of Swissborg started to hit an all-time high. And now if we zoom in, we can see it a bit more clearly. The first sort of a period of profit taking happened at the local top here before a correction. Then we had a massive drop here right at Swissborg's all-time high. And then right before this big drop or big sort of correction right here, we had another period where essentially I assumed that the guy thought that, the rally is over. It's probably never, it's never recovering. And therefore, I think this was also when Bitcoin dropped, when there were those $10 billion worth of liquidations or something. So a lot of people were very, very scared. And he essentially offloaded his entire portfolio from 24 million CHCB to just 113,000. And since then, the price of Swissborg has not recovered, at least for a couple of weeks, even a month. Obviously now with Ethereum rallying, there's a lot of ERC20 coins that are following suit. But overall, in the short term, you can definitely see that this address has had a significant impact on the price action of Swissborg, right? So what can you do with these types of metrics that we have shown you, or how can you track particular moves of large addresses for your own sake? So when it comes to identifying individual addresses like this one, there are two things that you can do. Given the fact that this particular address currently holds no Swissborg at the moment, what you can do is you can create an alert for the next time the balance of this address goes above a particular limit. So you can say, okay, let me know the next time that the balance of this address goes above 2 million Swissborg, CHCB, because that would sort of be a significant investment by this address. And it would suggest to me that he's moving once again back into, aggressively into this coin, and probably is on another accumulation spree, and I might want to pay attention. On the other hand, if we found an address that hasn't sold all of its holdings, or we found an address that has continued to accumulate and has yet to sell off, you can set an alert. The next time this address, the balance of this address drops below a particular threshold or moves down by a particular percentage point, right? So you go less than, let's say 2 million CHCB. You set up which channel you want to receive your alerts from. Let's say enable Telegram alerts. You decide whether you want to make it public or private, and that's about it. You create an alert. As far as the other two metrics that we've talked about today, let's move into whale transaction count. So whale, there we go. So the way that you can set up an alert for this metric is you go to add alert, change alert type, because the default alerts are for price. And then you go here to on-chain. And here you can set up alerts for basically any of our on-chain metrics, including whale transaction count. So I can say, okay, let me know the next time that the whale transaction count for Matic is more than 150. Actually, let's look at the, let's do it properly. So the big spike was here. It was 180, 320. This was above 93, 111. Yeah, so I think anything above like 100 would probably be, something worth paying attention to. Maybe 150 here. Okay, so let's say, seems like I was right. Let's go on chain. Whale transaction account 100K USD. Let me know the next time that this. Sorry, 150. Let me know the next time that the whale transaction count for this coin goes above 150 in a day. It lets me know the last times this has happened, and you can kind of see, when this signal would have triggered. We can then move the limits if we think that it is too noisy. And then finally, right, I set up an alert. I'm on a different account, that's why my alerts haven't been set up. I usually use Telegram alerts. So, you enable them here, connect them, Telegram notifications, and create an alert. And just like that, your alert was successfully created. And then you can do the same thing for supply distribution. On-chain supply distribution, let's say we found this group of addresses that we thought was very interesting. Let me know the next time the supply, the amount of Matic being held by this group of addresses moves down by 10%, because it might suggest a period of profit taking by this group of addresses, and you can create an alert for this as well. So those are the three types of different metrics that we wanted to cover today. Now, before we end, I wanted to also let you know that I talked a few times today about the fact that our labels for different addresses, like for example, when we go back to top transactions, once again, you can definitely see that not all of these addresses are currently labeled as belonging to a particular entity, whether they are, whether they belong to an exchange, whether they belong to a particular DEX or a centralized exchange trader, so on and so forth. So with this in mind, we know that it is, it's imperative for us as a market intelligence platform to continue to improve our address labeling and generally to find new ways to track key stakeholders in the market. Now, with data science and machine learning, we can only do so much. Some of these, addresses, there's nothing that can replace community-driven market research. And, people that are actually aware and can prove why they are aware that this, for example, address belongs to an exchange and this address belongs to a particular whale, right? So for these types of tasks, we have recently created a new platform called hunters.santiment.net. So Hunters is a decentralized platform for crowdsourcing market intelligence. So essentially the reason why we developed this sort of side project is specifically so that we can improve our labeling, particularly our address labeling, and we can reward people that know of certain relevant addresses. So for example, if you know about uni-treasury addresses that we might be missing, what you can do is you can create a proposal and say, look, I'm aware that there are 4 or 5 uni-treasury wallets that are currently on the Ethereum network. These are their addresses, or this is the total list of addresses. And then other people in the community can vote on your proposal. If they agree that this is a legitimate proposal and that the addresses sort of check out as belonging to Uniswap, both you and the people that have voted for your proposal get rewarded in SAND tokens. And this is the entire platform is live on the mainnet, and we're looking to make it completely decentralized. Currently, there are obviously some issues with making it entirely decentralized because of layer 2, but in general, this is something that we've wanted to develop since 2017. Our idea was always to try to make a decentralized ecosystem where people can trade market intelligence and share their knowledge of the crypto ecosystem and the crypto market and get rewarded for it. So if you think you know much about crypto and you think that you can contribute to our labeling efforts, we're starting with address labeling, but we're going to be expanding this to other metrics and other sort of stakeholders that we need help with. If you think that you can contribute, go to hunters.santiment.net, create a proposal, or become a sheriff, which is a person that votes on other people's proposals, and get rewarded for your contributions to providing more transparency to the cryptocurrency markets. All right. With that said, last order of business. we have an outstanding discount coupon code. It's only live for another 10 days. So I definitely suggest, if you liked anything at all about what we shared here today, Sand Spring Fling, Max is going to show it on the screen as I'm talking. There's a 40% discount to any billing plan, whether that's a monthly or a yearly plan, for Sanbase, Sandsheets, and other tools within the Sanbase ecosystem. So if you have found this interesting, if you have found it helpful and you want to explore it, first of all, when you create an account on Sanbase, you get 2 weeks free to explore the entire platform. From then on, it's just $49 a month. However, by using Sand Spring Fling as a coupon code, you can get 40% off your first billing cycle, whether that's a monthly plan or a yearly plan. So I think we're already one of the most affordable on-chain and social data providers on the market. This makes it even that much more of a no-brainer to sign up for Santiment and get a pro subscription. So with that being out of the way, I hope that this was useful to you. Brian, anything to mention before we sort of start wrapping things up?
It's been great, guys. I really appreciate you all coming in, and Dino had the majority of the talking on this call, and I want to thank him for his detailed explanations of how to really use our whale metrics to their maximum potential. Stay tuned for our next 2 webinars coming these next 2 days. And of course, on top of the discount code that Dino mentioned, I also want to mention that we've got those referral links that you can all create, whether you're a Sanbase Pro or just a free Santiment user. Just go to your avatar in the top right, go to account settings, and you can generate a referral link, and we share 25 to 35% of all profits, or all purchases, initial purchases, I should call them. And you get a nice piece of that pie. So spread the word, and we monetarily reward people for doing so. So thanks for being a part of our community, and we really look forward to having you guys for the next 2 webinars the next couple days, as well as the This Week in Crypto call on Friday.
Thanks, guys. Tomorrow we're going to be talking about social metrics. So social volume, crowd sentiment, and sand trends. These are 3 metrics that nobody else has on the market. They've all been developed in-house. And I think some of them are probably even more reliable as far as catching tops in particular. So if you're interested in figuring out exactly when the coin is sort of reaching that peak hype level and how to set up alerts when it is, so that you can get the heck out of that coin if you're already in it, possibly, or you might want to consider reducing your exposure, we're going to be talking about social metrics tomorrow at the same time, 6 p.m. Central Eastern Time. Until then, thanks everyone for joining us, and talk to you soon.
Great stuff, guys. Thank you, Dino.
Thanks, guys.